It's Tuesday, October 19th, 2021. I'm Ashley Pollard here for today's edition of Tuesday Talk, where we review common real estate and mortgage related terms. Today's term is discount points, and I'm not only going to define it today, but I'm also going to flip my camera and give a real life example because I think it would be best explained that way. So a point is just prepaid interest. It allows a borrower to buy a lower interest rate, which ultimately is going to affect their monthly mortgage payment. So the payment of points is a one-time thing. It usually happens at closing, and either buyer or seller can pay them. It doesn't matter. Points are tax deductible in the year that they're paid, but they're only tax deductible for the buyer. Doesn't matter if the buyer pays, it doesn't matter if the seller pays, they're only deductible for the loan that they are being paid on. So since the seller does not have the loan in the situation, they would not be able to deduct points from their tax return, even if they're the ones that paid for the buyer. Now, what is 1 point? 1 point is equal to 1% of the loan. So in the example that I'm about to give, the loan is $390,000. So 1 point would be equal to $3,900. 2 points, you would double that. 3 points, triple it, so on and so forth. So here's the example. So here's our option with a purchase price of $500,000 and the loan amount, as I mentioned before, of $390,000. This buyer, just FYI, put down a 22% down payment. So we've got 4 options, and these are the different interest rates for each option. Option 1 is a 3.125% interest rate. Option 2 is 3.25%. Option 3 is 3.5%, and option 4 is 3.625%. And if your lender does not provide a tool like this, then give me a call because this is very helpful, and I will put you in connection with my lenders who absolutely do have these tools available. So the difference in monthly payment is here. If you go with the lowest interest rate, your monthly payment is going to be $2,519.32. If you go with the highest interest rate, your monthly payment is going to be $2,627.26. So what is the cost upfront, or how many points do we have to pay to obtain this lower monthly payment versus this higher one? Because the difference between option 4 and option 1 is just about $108 per month. So what do we need to do to be able to have a lower monthly payment? So let's look here at this, which is showing our points. Same situation we see up here, same 4 options for the monthly payment. This is just showing the down payment, blah, blah, blah. So look at the amount of points you have to come to closing with. For that option 4 with the highest interest rate, you only have to come to closing with $3,412.50 in points. If you wanted to get that $108 monthly savings and go with the 3.125 interest rate, you have to come to closing with just over $7,000 more. You got to come with $10,725. So it might not seem worth it to you, but this is where you have the conversation with your mortgage lender about what your long-term goals are for the home. If you don't plan to be in that home long at all, maybe it's just a couple years and you're out, you might not want to come to the table with the extra $7,000, because if you're only saving $108 a month in that monthly payment, it might not end up paying for itself for the short amount of time that you're in the home. But let's say that you want to be in the home for a long time. I'm actually going to show you this interest in 20 years. And if you look here, let's say you plan, this is a 20-year analysis. Let's say you plan on being in this home for at least 20 years. Look at the amount of money that you are saving in total interest and mortgage insurance if you go with the option 1 of the 3.125% interest rate versus how much you'd end up paying if you went with option 4. This is a $30,000 some dollar difference. So bringing an extra $7,000 to the table in points to get this lowest interest rate is actually going to save you a lot more money in the long run than you would save if you just brought less money to closing and went with a higher interest rate. This is if you are going to be in the home for a long time. So again, talk to your lender about which scenario would be good for you. And again, I'm hoping that they have something like this available for you so you can see all the breakdowns. What's your monthly payment going to be? What's that going to cost you over the long run? Here, look, you can see This is the monthly savings if you go with option 1, that $108 per month. So let me know if you don't have tools like this available to you. This is very helpful to give you a visual, but that's pretty much it for discount points. They're just a way to buy down your interest rate and have a lower interest rate. And it really just depends on what your goals are for the home. So that is it for discount points. Any questions, please reach out to me and I will put you in touch with my amazing loan officers who can give you a breakdown just like this. And if you're thinking about refinancing, or if you're under contract and you just think your numbers are not correct, maybe we can switch you out and get you into a better situation. I appreciate you tuning in for today's term. Have an enjoyable rest of this beautiful fall day, and I will see you next Tuesday for Tuesday Talk. Have a great week.